hold of it. So, but I mean, my sleep is completely gone. You know, I'm up like at 4 o'clock in the morning.
It's a mess, isn't it? I'm up 4:30 this morning again, and I never do that. You're just going like this all the time.
You know, I've become a zombie, man. I've become a zombie.
Yeah. Eat your vitamins.
I don't know which one. This doctor keep prescribing more bottles.
We're getting a crowd building now here. I see 27 on.
Yeah, let's give them some time, so this way they don't miss anything.
For sure. I'm just going to fix some lighting. Hang tight.
No problem. Some people love to open up their camera. Some people don't. Well, they're in their pajamas.
I encourage everyone to put your camera on because it's good to see who's here, and you get a lot better meeting and a lot more interaction and questions and things. So if you're listening, which you must be, turn on your cameras if you can.
Get to see who's paying attention, right?
Yeah, Lisa is outside sitting on a patio or porch or whatever it is, beautiful, wherever she is.
So Steve, I've got you as co-host to screen share, so you're okay with you're set with that. You're okay. You don't need.
I shared it a couple of times before, so hopefully this time it will work too.
Perfect. Lisa Kell looks like she's in a nice spot today there.
Yes.
We have a beautiful day. It's super sunny up. Yeah, I'm in Barrie right now. It's gorgeous out there. Finally turned.
What's the weather today?
Like 12 degrees and sunny. Should be doing this outside.
Oh my God.
Yeah, I'm taking advantage. It's finally sunny up here in Creemore, so sitting on my porch.
Nice.
How about my background?
Paul is in winter.
Did you keep the snow?
I got my scarf on.
Come on, Paula. You got to change that.
Okay.
You got to learn from David. Look at David. David, God knows where he is. Costa Rica. He's in Costa Rica.
2 minutes ago, he was in the snow too, just saying.
We just did a Zoom where we just said goodbye to winter, so I just had to switch gears. I didn't have the courage to show it to you guys.
This is where I feel like I've been sitting the last 8 weeks.
That toilet's way too clean. You've had too much time on your hands.
I love that.
That's great.
Oh, but you'll notice I got out today. The doors are open and I stepped outside. I'm going to make a move today. My wife let me out. Hang on, I'll switch back.
You get some time in the yard today.
Right. Or this one, if you like. That's been the last little while too. But I bet I'll get
the hoarder. That's awesome.
All right. Here we go.
That's great.
So we have about 41 now. Steve, do you want me to introduce you yet, or do you want to wait another minute?
I mean, go for it. You know, you want to. What time is it? It's like let's give them another 2-3 minutes. It's 11:02. Let's give them another 3 minutes. So 11:05 we start.
Okay, then everybody knows if you need to do something, you have 3-minute countdown.
Everybody's doing good. You know, show thumbs up that you're doing good. You're healthy. So, you know, perfect. So automatic survey with the thumbs up. Anybody is interacting with the customers, doing a listing, doing a buying, shows your hands up if you are working. Beautiful. So you are working.
We did yesterday morning on our weekly Tuesday. I tried the poll that Barb was talking about. So we had about 55 roughly on the call, and the vast majority had been actively working with buyers. Just so everybody, if you weren't there yesterday, about half of the people had, over a third had done some sort of listing appointment virtually or in person, and basically everybody has some activity. So that's really optimistic when you look at it, because it's real stuff.
Good. Yeah, no, it's the market is really rebounding. I was this morning at a Zoom call with Ottawa, May 3rd to May 9th. Ottawa did close. Ottawa usually in a month does about 600 transactions on a normal market. Ottawa in the first week of May did close to about 100. So if you goes on the same projection, let's say 400, Ottawa is almost about 65-70%. So Ottawa is really, and your market is very close to Ottawa because of the affordability. So no, everything is coming back. It's just a matter. Have you talked, Mark, about the opening of the office?
No, we just mentioned it last week that, you know, it's in the works or the thoughts there and you know, a soft stage 1 type thing. So you're welcome to talk about that this morning.
Yeah, we basically between today and tomorrow, we're going to install the plexiglass at some of our offices, and within the Barrie and Simcoe County will be in Bayfield will be the first one. And we are basically going to make sure that staff, you guys, and your clients are protected. And that's the first stage. We're going to have multiple bulletins, office procedure, client room procedure placed all over the place. And follow them up, please, because it's really for the safety of you, your clients, your staff. The most important part is we call our premises mask zone premises, not mask free zone premises, so mask zone premises. Make sure if the clients come over there, you got to greet them at the reception, give them the mask if they don't have a mask. If somebody drop a check, a co-op agent, make sure they come with the mask, because we can't allow people to come to the premises. It's actually guideline by the Ministry of Health and a province, and we need to follow it. We did a great job so far. Knock on the wood, 8 weeks. This is going to be 8 weeks. No casualty, no illness across all the agents, their clients. So let's continue keeping it the same way. We need really your cooperation, all of you, to make sure that this is really going to implement it. We've been talking with the other brokerages. Some brokerages, they just opened up the office. They didn't put any regulation or policies in place. And when we were talking to them, they were saying, oh my God, what a disaster. Agents are coming with 6 clients. They think it's normal life. Don't do that, because if your office get infected, guess what? We end up shutting it down, God knows, for months, because then we have to go through the whole health procedure with the health department. Anyway, we will get an email with all the details within the next couple of days.
Excellent.
Okay.
So yeah, let's get started and kick this thing off, everybody. So officially welcome. We're getting good at these Zoom meetings, and seems to be the new norm for still a little while yet. So we have some people here that aren't from our local office. So welcome to a Hallmark Chase Zoom meeting with some good information as you are expecting to hear. I'm recording, so we'll be able to share this with you after if you miss anything. And if you're new to Zoom, the chat button at the bottom of your screen. But I would suggest let's try to listen to Steve first, and then we'll open up for some questions afterwards. That seems to work the best. And just lastly, if you live in a cave, Steve Tabrizi is the Chief Operating Officer of Remax Hallmark Che. And I will pump your tires a little bit, Steve, even though you don't have a tie on this morning. I will say that he knows his stuff. He analyzes markets all across Canada and the globe. Been in the business forever and a day, I'm paraphrasing here, and has really been a leader in this whole COVID situation with the company and driving us through it and providing resources and getting things going and having us on top of things. So anyway, it's been really good having this partner throughout this last 8 weeks with everything that's going on. So we're happy where we sit. And Steve, the floor is yours, and good morning, and thanks for taking the time to give us some numbers.
Good morning. So just to make sure, so you see my screen, correct?
Yes.
Okay, beautiful. So let's start. So I will go in about 25 to 30 minutes. And as Mark said, write down all your questions. I'll be more than happy to answer them all. Just for the record, I'm not an economist. I just love to play with numbers. My entire life, I believed in the facts, not just the hypothesis. And usually it works so far. I'm 54 years old. In 25 years that I've been doing this, most of the time, when you play with the numbers, it does work. My background, for some of you, if you don't know, is industrial engineering, and I also have a MBA in the business, and that's where all these numbers comes. but I end up becoming a realtor. That's all. I don't know what happened to me. So anyway, so let's take a look at Barrie and Simcoe County fast fact. So it's about 5,000 square kilometers. This area has grown over the last 10 years by 560%. And one of the reasons for that growth is the magnet for the lower housing costs. In fact, actually, the housing costs over there, 45 minutes. If you are not in the traffic, 45 minutes northbound drive from your Toronto, suddenly you save $500,000 in the cost of the homes. Population as of end of early 2019 is sitting at 215,600. Total employment is about 119,000. And surprisingly, family income in Barrie, I was shocked when I pulled this number. Is $92,000 per family income. It's actually above the GTA. GTA is sitting at about $87,000. So it's a destination for many baby boomers that they used to have a larger home, larger properties in Toronto. They retired. They want to be close to good facilities. Hospital, Barrie's hospital is one of the best hospitals in province. Many people choose that destination to be up there. So business demographic, that's another beauty with the Barrie and Simcoe County. It's not focused, it's only in one business. If you take a look at this chart, you will see the biggest percentage is one is real estate and leasing, 10%, retail is about 11%, and construction. Many construction companies, their headquarter is in Barrie and Simcoe County. So I guess probably the price of the land and also storing their trucks, their material, their equipment. But that's another beauty in terms of the impact on the change of the market and economy. So it's not a one sector, heavily one sector. Look at Alberta, what happened. They put all their eggs in one basket, which was oil, and look how badly now they're hurting. Immigration, it's growing into your region, not as supposed to. I guess one of the caveats for growing the immigration is employment. Employment is spread among so many businesses. Therefore, it's not a great opportunity as much in terms of the employment yet. So the immigrants are usually have the tendency of going there. Of course, you have one car industry over there, Honda. Honda is expanding, and also there are TD Bank call center also in Barrie and Simcoe County. There are a couple of major employers up there. Vacancy rate is sitting roughly at about 3.2% at the earliest stage of the 2019. So pretty much in line within the province. The province is anywhere from about 2 to 3.5%. So you do have low vacancy rate. So what was the condition of the housing market before the shutdown? As we discussed, 50% cheaper than GTA, so quite attractive. Average freehold home price at the end of 2019 was about $516,000. Very interesting, when I research your region, the inventory every year is increasing compared to many other parts of the province, but at the same time, the absorption rate is quite at par. So it's really absorbed fast. So other region, we have a difficulty with the inventory. Inventory is actually low. The demand is higher. Yours is pretty much at par. It's sitting at par. So you had in 2019, 12.1% more inventory versus 2018. Average selling price in February of the 2020 was $548K, and it was a 5.4% from the same period of the last year. 17, again, back to the inventory. For the same period this year, the inventory was up 17% versus the February of the 2019. Top 5 neighborhoods, the blue represent the value and the red represent the momentum. So Angus, Alliston, Cookstown, Lefroy, and you can see these towns were the most attractive in the Simcoe County and in your region, and most probably because the affordability of the price. And Innisfil, for example, I know for sure the Innisfil area because of the proximity to Toronto, and the Innisfil recently, as of last year, really have a great approach in terms of the development. I know one big family called Cordelucci family that literally has bought every land that you can imagine in Innisfil because they know the future of the Innisfil, what's going to happen. So new home developments in your region in 2019, 37 new home developments, 18 condo development. That's an interesting stat. Condos are moving up there because that's an entry level for people from a rental. Yes.
Steve, can you hear me? Steve,
yes, I can hear you. Yes.
We're seeing in the chat group that there's some sound issues. I'm fine at my end, and others are saying they can hear you. So everybody, that if you're having sound issues, maybe just you can leave and come back to the meeting and let it reboot. Perhaps that happens the odd time on Zoom, but I'm seeing most people are good. So hopefully you can leave and come back if you're having issues. But sorry, Steve, we'll keep going along. I think we're all right.
That's okay. We can wait for 2-3 minutes if everybody want to come back.
Some are losing sound, but most are saying that they're fine. So you just keep. And we're recording anyway, so okay. We're all good. We're good. Keep going.
Okay, so yeah, the interesting stat was 18 new condo development. So as you can imagine, the price per square foot for a condo in your area is quite attractive, and is an entry level for a rental that they want to go into that market. So the median list price for a condo in Barrie was about $489,000 for a decent size, roughly about 870 square feet. The same condo in Toronto is almost about $1 million. 8 townhouse development. The townhouse and raw houses are quite attractive, and 7 single family home developments. The median price per square foot for what we call it the low-rise home, which is the freehold, is about $325 per square foot. So if you look at the historical with the Barrie and district, you can see historically basically has always performed upward. As you can see in July, anywhere between January of the 2017 to July of 2017, which similar to the other market, it went completely through the roof, almost hit the average price of the 600,000. But right now it's with the historical growth and it's keep going up. So what happened? Some of you, maybe you've been at the other call. So the next few slides, maybe some repeat for you, but I think it's important that you understand in any crisis, financial, health, earthquake, you name it, any natural disaster, basically there is a disruption in the lifestyle of the people who live in that region. So exactly March 17, was the state of the emergency by the province, and March 23rd was the shutdown order. So we are not actually even 2 months into it, just a week away. And when the disruption happened, 3 things usually happen. The first thing is the collapse of the market. And usually the first collapse of the market is the market. Stock market, completely a free fall, went down by anywhere from about 35%. And then the government announced the shutdown of the non-essential services. Shutting down of the non-essential services really was a big blow to the consumers. They basically couldn't understand, what do you mean that I can't go to the mall? What do you mean I can't go to a restaurant? It wasn't really an easy digestion for them. So it took consumers, the Ontarian or Canadian, almost about 5 weeks from, let's say, mid-March to maybe almost mid-April or the 3rd week of April to understand what's happening. Reduced work hours of the Canada borders, which affect the immigration flow and the newcomers coming, which, to my humble opinion, they should have shut down the border way in advance, and they could have stopped the rate of the infection and the issues that we have right now. And automatically, when the market shut down, when the businesses are shut down, guess what? We have job losses. All the job losses are temporary. Remember, they are temporary. Under the labor law, We have it at a Remax Hallmark. We have about 150 people. We call it a temporary layoff. And you're only allowed to have people on a temporary layoff for 20 weeks. After 20 weeks, you just basically got to make a decision. Are you bringing back or you permanently terminate? So everybody is going to be in that incubation of the 20 weeks to make a decision. So 20 weeks, which is almost about 5 months, people can go on EI and the government assisted. So, and then in reaction to that, two things happen in our industry. Messages from different boards. You can have open house, you have an open house. Finally, everybody came to the same conclusion, no open houses. We were the leading company initially. We shut down the offices. We made a policy about the open houses and also private showing to a bare minimum. So the last two really impacted our business. And they were saying, hold on a second, I can't interact, I can't have open house, how can I prospect? So that was the two key question. So, and then around this, there was a company which is around for years and do phenomenal surveys called Abacus Data. You can Google them, you will find fascinating article over there. And they have basically a survey. And the first survey, if you recall the joke all over social media about the toilet paper, everybody was panicking, running to the grocery store. Let's buy, let's buy, let's buy. So now from a collapse, we are coming to a reaction. People are reacting right now, saying, okay, I better hoard, I better have, because it's the end of the world, and God was the only thing that I need, no food, but I need a toilet paper. So, and then after that, survey from the people, they said, what do you think has happened? Everybody was really confused. I don't know. I am scared. Those are the questions they asked through the survey. I'm part of the Abacus crew, so when they do the survey, they send it to me, and I always participate in those. You try to be, if you go register, it's really good. And you can see this was the shift, so the uncertainty. So, and let's compare the uncertainty that we had to two crises, the most recent crisis. SARS, Ontario, particularly Toronto, was one of the hardest hit in Canada. But there was no shutdown. The sales declined by 10%, but the prices increased by 6%. Similar behavior. When the pandemic or when a crisis happened, majority of the group of people, they sit on the sideline. Canadian, they have enough equity in their homes. They are not leveraged to the maximum. So they sit on the side, they watch, they see what is the reaction of the market. Because again, Canadian for years, they have built up good equity. They are not up their eyeballs with the debt and the mortgages similar to the other neighbors in South. In 2008, which was the worst one, I vividly remember, October of 2008, Lehman Brothers, we woke up in the morning and basically federal government in US didn't bail them out. They filed for bankruptcy. And that was a disaster. The disaster was the federal government didn't intervene. So GTA prices dropped by 35%, home prices declined by 13%, and the prices declined, as you can see, almost about 25% in the average prices. But the market made a V-shape, which is basically fast down, fast up in less than 4 months. And the reason, I don't know if you recall Jim Flaherty, the late finance minister at the Conservative Party. There is a book about him, and he wrote a memoir, and he went to the 5 banks. He said, the federal government guarantee you one thing. I want to make sure you continue lending practice. One of the beauties of the Canada system is we are a conservative, and we have a very social policies. We are heavily regulated by the federal government. We are not like American, or even similar to Europe is very close to us. American is basically a very capitalist market. Privatization is through the maximum. They can do whatever they want to do. Here, no. Banks also are heavily regulated. So what saved us? The bank, they continued the lending practice. When there is a liquid cash funding on the street, the market moves. And the market rebounded in early January of 2009. And everybody, there are actually multiple articles of 2008 they were questioning how Canada really survived 2.5 years of the worst financial crisis. Everybody was in that financial crisis for almost 17 months, including Europe. So Look at the perspective of the home ownership in Canada. 40% of them, they have a mortgage, and 28% no mortgage. 40% having a mortgage is really low rate. Americans are up to almost 90% of the value of their home, they have a mortgage. And that's what happened in 2008. Imagine you don't have equity. So guess what you do? You grab your car, you go to the bank, you tell them this is the key, have a nice life. I don't care, I'm not losing anything. There's no equity in that house. Even if I sell it at a full pop price, I don't get any cash back. Canadians are not in that situation. 40% mortgage, that means we have 60% roughly equity in our properties. So let's also take a look at this. I've talked about this multiple times. Why the real estate sector is quite important for the Canadian economy. We used to be a country, sad story, as much as I love everything being our market, in our hopper, but the Canadian, as a country, was heavily involved on the resources and oil. It was a huge income for Canada. And in 2008, let's acknowledge, Alberta saved the country. Alberta was injecting and pumping the money to all other provinces. But what happened in the last 10 years, we went through a complete cycle. We lost the manufacture, which was completely predictable because not only us, majority of the Europe, majority of the US, they have lost it to the cheap labor in emerging country, India, China, Mexico. And that's unfortunately, I call it the greed of the capitalist. You know what, whatever the product that can be at the highest profit margin, let's make it there. Through this pandemic, I think a lot of companies that they have learned, and a lot of government they have learned, they made a huge mistake by putting all their eggs in a basket that be only depend on one supply chain. But for 10 years, what happened? The flow of the immigration, massive foreign investment in businesses and bringing the fund to Canada. Canada is called as a safe haven. So made real estate rental and leasing a $254 billion engine of the economy. Now you add the other entities to it, such as construction, such as finance and insurance, you're suddenly looking at and real estate as a whole, almost 20% of the GDP. The GDP of the Canada is a $2 trillion on an annual basis. So when they announced, the provincial government announced, it says, oh, real estates are essential, we all were criticizing. What do you mean we're essential? Are you crazy? We should shut us down. No, the reality is went behind it. They didn't look at over pending transactions, somebody got to sell, somebody got to buy. They know how much is going to impact it. And if you notice, the construction was one of the last sector, only some of it they made it non-essential. Still the construction is working because it's very important for them, is a heavily populated job sector. Same thing with the finance and insurance. Did they make the finance and insurance non-essential? No. If you look at this chart, you will see really what was their decision based on. So around the same time, the Bank of Canada started lowering the interest rate during the last 8 weeks. And the Bank of Canada was hoping by lowering the interest rate, they create activity in the market. Unfortunately, it didn't work like the last time. It's good that they lowered the rate. They enticed the bank. Then we noticed the federal government jumped in. So look at this global map. This was done by a company called howmuch.net, and they collect the global information. And if you look at Germany, it's a country which is probably right now is the #1 industrial country in the world. Germany only contributed 189 billion stimulus package for this pandemic. Look at Canada, 145 billion. Our population is almost about half of the Germany. And the Germany's industry is by 10 times ahead of any industrialized country. So I'm proud that the Canadian government really stepped up. We are among the pretty much the top 5 countries. Don't look at the US. Nobody can compare itself to the size of the US. The US so far has contributed $2.3 trillion. But if you compare us to the similar size, similar density, Canada has done far. Probably I would rank Canada #1 in terms of their contribution. And one of the biggest things that the Justin Trudeau did that really made a huge difference and caused the recovery of the pandemic quite fast was the subsidy of the employment. Okay, initially they came up, they said, oh, 10% we will pay. And they watched England and they watched Denmark. Both countries, they contributed almost about 75 to 80% for 3 months or 4 months. Canada matched it to 75%. And last week he announced that if he has to continue beyond the end of the June, he will continue beyond the end of the June. When you keep the employment and employer support to keep their employee out there and pay them, that's the fundamental of any economy. When people can function and receive money, doesn't matter from home, from work, shift, staggered schedule, that will grow the, continue the momentum of the economy. So we take a look at also the first-time buyer. We were very concerned about the first-time buyer. The first-time buyer, millennial, particularly, are the biggest part of our buying market. So if you take a look at the average age of the 25 to 34 years, 64% of those are in that range. Those buyers are buying in Barrie and Simcoe County because they can afford. They can't buy in Toronto. And they are basically, they don't mind to travel. We saw the shift about a year and a half ago. People say, look, I know it's about an hour travel for me every day, but my dream is not a 600 square feet condo downtown Toronto. Millennial, majority of them now, they have family. They want to have children. And they said, okay, I'll pick a sub-market that is affordable. Where were those sub-markets? One was East Durham, one was North Barrie and Simcoe County, and one was Ottawa. So if they could get a job and transfer to Ottawa, they would do that. And the immediate easiest decision for them was Barrie and Durham. So we were worried about them. Then we look at what was the job losses for the first-time buyer. So first-time buyer on the same age category, you know, the report came out, there are 2 million people lost their job, which is not accurate. You got to remember, 1 million of those people, they were before the pandemic, okay? And again, keep in mind, we just started talking about reopening of our offices. As of yesterday, we have called several of our staff that we want you back to work as of next week. So we, as a sample, one sample of the industry, look, we are calling people back to work. And if you look at this chart, you will see only the loss in first-time buyer was about roughly, if you include 25 to 44, about 200,000. So 200,000, which is basically 10% of the 2 million, okay? Why the job losses on a first-time buyer in that age category was a lot less than any other industry. Millennial, I call them very lucky. They got professional jobs, they got good job, they got high salary job, they're highly educated. They're also quite entitled. Some of you have those children. I have 2 of them, and they don't care. You don't pay them right, they quit, they go to the next job. And that's how they grow. That's how they are so confident about their job. And now other sectors is hiring them. Banking industry is ramping up the hiring. Federal government, provincial government for service sector, because everything is gone online, is hiring them. Revenue Canada is hiring them. Technology, which is the hub in Ontario, is hiring them because the technology business and finance business is gone through the roof. So the previous survey, 65%, they said, I don't know, the world is ending. Now, fast forward, in the middle of their April, Abacus does the survey. They said, what do you think about the Doug Ford plan of reopening? So 83% Canadian, they said, as long as there is precautionary measure in place, I want to go back to work. So from a panic to acceptance, and now everybody is eager to re-engage. And they did the survey about the shopping mall. Interesting, 65% of the people previously, they said, oh my God, I'm not gonna go anywhere, I won't touch anything. And now you got 66%, they said, yes, I go to a mall, I go to a shop, as long as those social distancing, as long as the reduced number of the people is gonna be imposed. 7%, like any other, 10% of the population, they don't care. It's like nothing has happened to them. And when you talk to them, they said, oh, everything is fake. It's fake news. There is no pandemic. There is no virus. So they're always going to be there. And then back to the office, better than even going to the mall. 71%, they said they will go back to their office. Now you can see companies are creating night shift, morning shift, 2 days work at home, 3 days work from the office. Everybody's just trying to figure out how we can basically function and be back to the normal life. So we watched the inventory, the ratio of the sold to listings, and we wanted to see, are we in a buyer's market? Are we in a balanced market? And as you can see, we basically just maybe for a couple of weeks, we were in a balanced market. We're back in a seller market. What is a seller market? A market that has an inventory between 2 to less than 4 months, typically. And basically the demand is higher than supply. So let's analyze what's happening in your area. So days on the market, again, based on the price range. If you look at the blue, which is April of this year, versus the gray, which is April of last year, you can see in the softest spot, days on market has dropped. What does it tell you? That's an indication that there is not enough supply. If they're going to be heavily supplied there, the days on the market is increased. But take a look at the 750 and a million. That's a luxury market of the Barrie and Simcoe County. You know, that's what's similar to, say, in Toronto, $2.5 million and up. So the days on the market for those houses are up because those are affluent buyers or seller. They don't have to sell. They don't have to buy. They are financially secure. They watch what they want to do. They are move up people from the 5 to 750. They are saying, do I make a move right now? Do I really need $1 million home right now? No, maybe I hold tight. Maybe the $1 million become a $900,000 home. And that's usually that top level will get the hardest hit in the changing market. Then we look at the median price and average price and a total sold. If you take a look at it, most reports from all the regulatory bodies are all about average price. I have an issue with the terms of the average price because the average price, unfortunately, is a sample of $1 million home and could be 8 of them, 550, 650, and then they throw $1 million there. Nobody take a look at really details of that home, which should be home price index. Medium at least is better. People at least compare the close comparable. And if you take a look at basically the median price, you can see the price really hasn't changed that much. I can see, for example, probably in the March, which was the market was really good, was around 530. And if I look at it right now at the end of the April, it's probably sitting at about 510, 550. So you're talking about maybe 4% price drop. But these are not the really clear indication. We are talking about a sample of a month. One sample of a month really is not enough sample. You got to let the market ride for a while. Inventory, you see the same pattern. So you see the inventory and sales, inventory drop, but the sales is actually keeping up. The blue is the sales, it's going up, it's not going downwards. And the inventory is going down. And the inventory, again, I emphasize, it went down because 60% of the people, they just say, you know what? Number one concern they had, it wasn't about the market. I don't want showing in my house. I don't want anybody with the risk come to my house. How, Mr. and Mrs. Agent, you are guaranteeing me that I will be protected? And that was a concern in the first 2 to 3 weeks. It's like the lawyers, they come with a bunch of clauses. If you bring the virus to the house, we're going to sue you. Everybody panicked and came up with the policies and, initiative and procedure. Now it got really refined. Now after 5 weeks, we can see solid clauses out there. We can see procedure out there. The agents are confident, consumers are confident, and we can see physical showing. Is it happening? And people are also getting comfortable with the virtual showing. They take a look at their top 10 choices, 7 of them maybe virtually, and the top 3, they will go for a physical showing. Average price is still going up. So I don't see any sign that is really coming down. And it's probably sitting right now at about 5, I would say 40, very close to the 540. This is for all properties, by the way.
Go a little bit more.
Jennifer, you gotta mute yourself.
Oh, sorry.
Okay. So Badar present this report, and public has access to this, fortunately or unfortunately. Take a look at all the arrows on the left side. Units sold drop, the average price is up. But people really, they just say, oh my God, look at the activity is down. The activity, those big number, double digit, it scares people. There is no explanation on this infographic, what is happening, why the prices are up. That's the problem that you have to explain. The ratio of the listing to the price up, to the price matter. If the listings are down, the activity is down. So the ratio of the listing to the sold, that's the key. And that's why we see the increase in the prices. So we did a regional update from April of the 2020 versus April of 2019. So average price is up by 5.4, and we saw 25% less inventory, and we saw also 48% less new listing. Days on the market is increased only by about 3.2 days, and average list to the sales ratio is literally flat, is unchanged. So this is good for you guys. You want to use this in your listing presentation. So average Hallmark sold price versus your market, meaning your competition, other brands, other companies, other brokerages, you guys are sitting at a 95%.
Steve, can you explain that? Are you there, Steve?
Yes.
Maybe just dive into that number a little bit more for a clear explanation. Some might be wondering about that average Hallmark sold price versus the market sold.
Yeah.
So we're saying that Hallmark, Hallmark is 5% just or not above it, or what does the 95 mean?
No, 95. Let's say a property is sold listed for $500,000. So you sold it for basically 95% of the asking price. That's your ratio.
Okay, just making sure.
So your ratio it is within the market. Right now, your market is anywhere from about 92% to about 97%. But the next factor is important. Average sold number of days faster than average market. You guys are selling by 3.6 days your home faster. Hallmark market share, total sold of the product from the from March 1st to the May 2nd, we pulled this data last night. You guys are representing 31% of the Barrie and Simcoe County. Okay, that's why Remax Hallmark Che is the #1 brokerage, is been for many years, and is still #1 brokerage over there. So that shows how much power and market share that you guys have. Hallmark sold percentage of faster than the other market. That's a percentage very similar to the number of the days. So you basically, when you go on a listing presentation, if your competition said, oh, I sell the home in 10 days, you can say, I'll sell the home by 3.6 days faster than my competition, and that's your percentage. It is really happening. So for performance of the metric of the Hallmark versus market by end of the April, Hallmark unit performance up by 25%, number of the unit. Hallmark volume performance is up by 32%. Average agent performance is 6 units. Let's convert that to the commission. Let's say average sale price in Barrie, let's say $600,000. So 2.5% of the $600,000 is what? $15,000. So average Hallmark agent up to now has earned roughly about 80 grand. And you went through 8 weeks of the really turmoil. So you guys have done a great job. You know, you gotta look at these numbers. That's your average. Average agent performance in a volume is $3.2 million volume. And these were really rocky weeks and really stormy water that you guys really had to get everything that you needed, and from mindset to re-engagement. So this is for your own personal use. The top 2, you can basically share it in terms of the listing presentation. But for the bottom, you are really within in the line. Average Hallmark agent with all the 5 regions, we usually do about, last year was about $159,000 average commission. We used to do it roughly about anywhere from about 15 to 18 transactions. So imagine if you have done for the first, let's say 4 months, 6 units, you're really in line to complete your year with the average of the Hallmark expectation. 5 reasons why Hallmark as a group of companies is outperforming out there. So we have a very clear purpose. Our purpose is to help you to build your business so you can help your client. We really have a strong leadership team. We know what we are doing. Somebody asked me this question. He says, you guys really pivoted and shifted really fast, and we are proud of you. I said, no, we didn't pivot and shifted fast. We've pivoted and shifted 5 years ago. And it is true we've pivoted 5 years ago. We expanded 5 years ago. We created our unique training and a development department. We are probably one of the very few brokerages that has a standalone department. We basically emphasize on technology, embrace the technology, centralizing of our accounting system. All that innovation and training and everything that we did allowed us to pivot fast during the crisis. Imagine if we didn't have those information in our hands and we had to pivot, we couldn't pivot. So we are ahead of the competition.
Steve, we lost you there.
Sorry, you heard me? Can you hear me? Anybody can hear me?
Yeah, I can hear you.
Okay, good. So yeah, so our pivot from the 5 years ago, that's what caused it that we are ahead of the competition. And the market share, it's always give us the power to basically of the referral and understanding what other market works. And then maybe one market will help the other market. So it's a sustainability for us. So how is the economy going to recover? We just demonstrated that the historical data are the great example for the future. So you guys are in the really good position. Strong flow of the immigration. I'm not sure if you heard or not, as of 2 nights ago, Air Canada was announcing that the opening of the airport and procedural policies, body temperature. There was a big argument on CBC about the privacy. I'm going to talk about the privacy also here. I think taking my body temperature is more important than the privacy, guys. You know, if other countries, European, South Korea is doing it, and then yes, there are mixed messages from the health department. Somebody may not show the body temperature, may become 6, 5, 10 days ago. But imagine anything that they do more is better to help us. And it's all about the tracking and tracing. You know, imagine they check your temperature at the airport today and you don't have a fever, but 5 days ago you have, 5 days later you have a symptom. So they can actually trace it back on that day you were not sick. So let's embrace the changes that is coming. So that will help the flow of our immigration. Why? There are many immigrants, they were supposed to fly in and get their landed paper. They are now sitting and anxious. They are waiting for opening of the border. We talk about the new job in the finance and technology. As much as I hate this, low currency of the loonie is helping us. Investment, foreign investors that are going to be attracted to real estate big time. So into the perspective, if they had to buy a house in Barrie for $500,000, foreign investor, they know only one currency, US dollar. So if last year they had to do it with the $420,000, which was almost $500,000, right now they are doing it for $375. They're 50 grand ahead. And that's what they love. A low interest rate will be around for easy by the end of even 2021. Short-term increase in the inventory will help us. Be careful with the inventory. Yes, we want you to re-engage, but bring the right product to the market. Don't just bring a listing for the sake of a listing. If the seller, your market is very at par, your market is not one of those markets that a lot of multiple offers. It does happen, but it's not really crazy happen. So list them right and bring the right product. Decline is, we're going to have a short decline in the rental rates. Some investors, they got to adjust their rent and they're going to be more. Investor shift, investor will basically look at the sub market. Investor probably don't look at the Toronto market because the Toronto market is still as expensive and there will be a lot of opportunities out there. Liquidity injection. There are so much opportunity right now in terms of negotiation of the real estate transaction. Old days, some of you have been around, vendor take back. Many vendor, they will do a take back at a really good, attractive rate. So that's one form of the liquidity injection that is available to the buyers. And the funding from the banks. Urban center, Barrie and Simcoe County is a vibrant center. So those center Consumer for 8 weeks, they told them to stay home. You can't shop. Watch what's going to happen. They're all going to want to go shop now. So spending will go through the roof. Overall, the province will lose some job. Let's not kid ourselves. Yes, it will lose some job. Probably this quarter and a third quarter, and it start to rebound back. The form of our market, let's also be very clear, is change. Some small businesses won't come back out of it. Most of them in probably mega centers such as Toronto. In your area, it will be less impact. But here, small restaurant with a high rent, $60 per square foot they used to pay. They can't open the door anymore. They lost that momentum. The cash flow is not there. But one good news is a majority of the landowner, land developers, landlords are really playing along with the tenant. There was an article this morning in a Global Mail. Oxford is the biggest landlord in Canada. They own malls after malls. They're only charged their tenants anywhere between about 50 to 75% in terms of the rent they're helping them. So I see in a long run, it's going to be a V-shaped recovery, but in a short run, probably by third quarter, it will be a checkmark recovery. So sharp drop. And as you can see, activity of the front desk is going up. Activity of our front desk from about 4,500, including Barrie and Simcoe County and Toronto from mid-March, it went all the way down to 1,200. Now we are close to about 2,500. So you're almost back half. And this is what's going to happen. You will see drop, you will see gradual up, and then probably by early 2021, we will see we are back to the same momentum of end of 19, beginning of the 20, which is natural. So 6 months of the year is left, 7 months is left. And into the perspective of the number, if we are back to 75% of the activity, which we will be back in 2020, it's a great year, man. It's a great year. So for your perspective, let's say you were making $150 commission. Let's say this year you're going to make $100,000. I got to give this part of the speech to you guys too. Agents are not realizing how fortunate they are. Through this pandemic, I went through 150 of my employee that I had a really great understanding what was their salary. But when I look at it and I see a family income in Ontario is $87,000, let's say 100, 50. And the agents average, they are making 80 to 150. We are in a very good position, guys. We are in a very, very good position. So the sunshine list, if ever they add the profession of the realtor to it, all the top 100 will be all realtor. There won't be no prime minister. There will be no MPs. There will be, the only person might be there. Actually, we will beat him too, the hydro executive, because there are people within the Hallmark company that they make a lot more than money even than that guy. Okay. So Warren Buffett, I will follow him all the time. Fearful when others are greedy and greedy when others are fearful. This is the time of opportunity. Don't take it in a wrong perspective. Deliver this message to your buyers and sellers. Seller will sell at the right price and buy at the right price. There is no win. There is no major gap here. And the same thing with, there are tremendous opportunity, tremendous, I use this more, for your buyer investors. There are people out there that they spread themselves too thin. And this is the time that you really embrace this opportunity. And this opportunity is going to be only 7 months, guys. The minute the market at a 75% capacity, those sellers, they're going to say, hold on a second, I wait another few months and I'm back to my game. Right now, to maybe September, explore those opportunities for people that they are around. And that's end of it. I'm all open for your question.
Okay, I'll jump in. Can you hear me, Steve?
Yes, I can hear you.
Okay, so that was outstanding. It was too bad we had some Zoom challenges with some audio, but it came around for me just fine. And we'll have the recording, everybody, if you're wondering. So excellent. So question. Let's open it up. What do you want to ask somebody about anything from soup to nuts about the market? Concerns you have, questions you may have. I would like to kick it off by just saying, as a realtor, given all the information that you're just presenting here, you know, we've been talking for weeks about what you should be doing. Do you have anything to add to that as far as what advice do you give someone who's watching in your day-to-day business based on what's happening out there? This is probably not going to be rocket science, but what is the best advice you give an agent?
The best advice, communicate and educate. Communicate and educate. Consumers are scared. Consumers are really confused and lost. Consumers, we did a survey here. At the first beginning of the pandemic, first couple of weeks when we were calling, we're getting refusal of the appointment. We said, why? Is there any reason? Should we note that there's no further showing? No. I don't know who's coming here. Tell me how you're going to handle my showing. Educate. Show them the process of the showing. Yes, it's not like your old days. Yes, auto confirm. Pick up the phone. Talk to the co-op buyer. Just say, how you are taking your buyer there? Do you have mask? Maybe some of our agents in the luxury market in Toronto, they would go at the door, all days, not even pandemic. Then they open the door. Open the door yourself. Make sure the buyers with the buyer agent that are coming through is safe and protected. And the more you educate them and communicate with them, the more they feel comfortable. And also share the interpretation of the data. Don't let them assume. I see the garbage every day on media. Oh, the market is down by 68%. Okay, so imagine you and us, we are consumers sitting at home. 68% down. How are you going to feel about that? You feel awful. So no, they need your help. It's never been more important than doing this. Zoom, I love Zoom. I am one of the pandemic that happened. You know what? I'm not going to buy I love cars, you know, as many of you know. I'm not going to buy a fancy or crazy cars anymore. This is the Zoom. Why don't embrace it? Do seminar exactly what I'm doing for all your clients. Bring them all. Let them be complete transparency. Let them ask you a question, any question. You have a demographic of the clients, doctor, engineer, workers, teacher. Let them meet each other through Zoom. Create fun for them. And listening presentation. You want to show the comparable? You don't feel comfortable going to the home? Do it first through Zoom, sharing the slides, and then say, okay, my second step is I'm coming to your home, physically take a look at what you're telling me is true about your home. How do you feel when you do the video? I was one of those few that was very hesitant, very not comfortable going in front of the camera. I right now don't care. I don't look at even the camera. I just do it. But I feel right now I'm in a Bayfield office, standing in front of that projector, and you're in your seat. There's no difference. Do you feel any difference? I don't feel any difference.
Getting about the same now after so many times, for sure. And the public's gotten used to this too, so it's not going to be weird for them, as we know. Gang, questions. Open it up. Who wants to ask anything and everything? And Mary Bateman had her hand up, but if you have your hand up, and I see Anna too, but Mary, did you have a question, Mary Bateman? There you are.
No, I have my hand up for the wrong reason. I'm sorry.
that's quite all right. Let me just check the chat. No problem, Mary. This is Anna Lewandowska. Do we have access to data that would show us flow of immigration into our area?
Really very limited. I tried to find it. Nobody in Ontario. If you go to the hub, there was a graph about Ontario immigration overall. Federal government increased the mandate about a year and a half ago to 350,000 immigrants come to Canada. 187,000 of them are supposed to come to Ontario. So we take almost 55%. And the cost of the living in the GTA is expensive. And many newcomers that are coming, they call them independent category. That means they are, by virtue of the education and degree, that they've been accepted to Canada. And most of them, they can't buy a property in the GTA. They probably buy a property in Barrie and Simcoe County.
Got it. Thank you. Other questions, people? Good opportunity to ask anything that's on your mind. Ed Tracy, Robin Jones, your numbers guys, anything you want to ask about the economy? If so, you can just unmute yourself. I'm just looking at our screen, who's on and who's not.
Hey, Steve, do you have any particular numbers on what's happening with the condo market in Barrie? Seems to be
Yeah, so actually, hold on a second. I have something about the condo market. Condo. Yeah, it shows the condo market in Barrie. So if you take a look at the January to now, the active listing from 70 in April is sitting about 74, so quite flat. And the sales number, it's quite down. It's quite down for Barrie by itself. It's maybe about 20%. You got to remember the condo market in Barrie and Simcoe County was one of the new entity that really was just picking up the momentum in 2019 and early 2020. So that's what I see the reason behind it. And if you take a look at also the other areas within the Simcoe County, such as, Innisfil, Tecumseh, and if you're comparing the same period of the 2020 and 2019, you see as overall activity, you will see is down and you will see inventories up. And that's one of the problems with the board. The board doesn't break it down by smaller neighborhood or smaller region cities. They just comes with the broad numbers, or they break it to only 4 or 5. And they don't do a comparable based on, let's say, a 3-bedroom homes with a 2-bathroom, front lot. And they have all those access, because when you broker load everything, you have all those information. If they want to really break it down and use the AI, they can. But I guess, I don't know why their IT department doesn't do it. When we do it, Michael McLaughlin is on this call, and Mark, both of them, they helped me to pull the data. Michael has created an Excel program, which is, he's playing with it. It's maybe Michael can jump in and explain the difficulty of it that we had with the Barrie and Simcoe County. Go ahead, Michael.
It's a work in progress, obviously, because there are, we're working with 2 boards here and 2 different sources of information that don't quite line up. Even it was challenging in the Toronto market, making sure that we were getting the right information, that we weren't double counting, handling for errors and whatnot. To be able to get that more up to the minute stats information, which is vital when we're going through something that is changing our market day by day, week by week. So we were struggling with that for a while, and we're still kind of finding the right solution. We're getting closer and closer to getting meaningful information out of it. But it's a challenge. Yeah.
For sure. I see a question from Corey, and I have one as well. Corey Holiday is asking, what do you think land transfer taxes will remain the same, or will they adjust those?
It's a big income for the city, for the province. I don't see they're going to change it. Municipalities are now start crying to the province and the federal government. I know John Tory already started. He's basically saying, I need money. I need a lot of money. The biggest income for the Toronto, for sure, is the TTC, transportation, and has dropped. Ridership has dropped drastically. And there's no income. And yes, they're going to need help. Somebody also asked, it says, when this thing end in terms of printing money? I wouldn't worry about that. Yes, I have said it before. The next generation will end up paying for it through the taxes, through the service fees. But we are not alone in this. The entire global market is in it. So it's not like, okay, Canada goes in a huge debt, and then the other market, they take advantage of us. If you recall, in 2008 crisis, Germany was in a really top position. And there was multiple articles, they say Germany funded Greece, Portugal, Spain, and the joke was Germany owns the entire Europe. So, and it is true, Germany funded Greece heavily and basically lend them the money. No, we are not alone. It's the whole global market is the same page, and it will be some hardship for after we come out of it for us in terms of the taxes, in terms of the fees that they will be charged. That's the only way that it's going to. Let's hope. The only thing I'm really optimistic that the pipeline. It's funny, through the pandemic, before the pandemic, they were criticizing the federal government in terms of the pipeline, environmentalists, indigenous and everything. No, you can't bring the pipeline, which is really shocking for me on a personal level. And now you see the survey shows it's tipped, because we really need that pipeline, guys. We have all of our eggs in one basket, which is Mr. Idiot Trump. And we need to take our oil to the shore, because we cannot have only one customer. Imagine you guys have one customer that does a transaction a year with you, and one morning, 1 year, the guy wake up, he says, that's it, I'm not buying any more real estate. So we need more clients. We need to take that oil to the shore so we can export it to many other countries. That oil is a big money machine for Canada. So if they do the survey, if they do anything, vote for it. Anything else do we have here?
I'm going to give you one more that I hear a lot from the agents, and then we can wrap if everybody's feeling that way. But the vast majority of people, even on this call, have clients that are telling them they're ready to do something, but not yet. They want to wait. But yes, we're going to buy, we're going to sell. And I guess just looking at the screen, put your hand up if you have people that are talking about doing something, but they still want to wait, just to get a look at the crowd here. Do we have any of those? Karen's got a hand up. Yeah, Sarah. So Chantal. So there's a whole bunch of that. So is there a way to delicately and being sensitive with people's feelings and motivations to use these numbers to demonstrate that now markets are markets? And I'm just stepping outside of the pandemic for a second here. There's up and down markets, and there's always buying and selling going on. So objectively, if you have someone who wants to buy, what's holding you back, trying to get people off the ledge a little bit? Again, not being manipulative, but there's reasons to sell or buy right now. Would you agree, Steve? And how do you explain that to clients?
Yeah, you know what? It's case by case. If the employment of that buyer or seller is secure financially, I call it, they are secure, they got to make their decision. And if somebody really criticizing you why you are practicing real estate in this sensitive time, my argument would be, I'm a Canadian, a part of the recovering the economy. I got to help the economy recover. I can't sit and just say, oh, okay, forget about it. It's too sensitive. Somebody's going to be upset because I'm doing prospecting. No, we got to go back to the game and just be sensitive to case by case. Talk to people. Do you really had a plan in mind to sell your home? How are you financially? So you got to remember that another opportunity going to happen. Many of us, including myself, through this pandemic, we came to the realization on a personal level, financial savvy. Do we need a big car? Do we need a big house? Do we need to spend so much on travel? Do we need to build this big deck, which we don't need it? So many people, they might actually downsize because they don't want to go through this change. That's one. Secondly, people that they are financially now stretched, they use their line of credit. They said, okay, I got equity in the house, let's sell, let's go to a smaller home. So those are all opportunities. So when you go to these presentations, start discussion from the financial ability of the client. That's the best approach. So this shows that you are coming from the economy of the care. You care about the process of the transaction. There's a question also here is, will the federal start to collect tax on real estate to recover the cover programs? Don't know, really don't know. There could be so many things. Another question from Angela. State of emergency has been extended to June 7th. I have a lawyer that is sitting on the fence regarding signing remotely after this date. Do you feel there will be a grace period for remote signing with lawyers, or is there indication that it will jump to business as usual after the date? Hey, there are lawyers out there that they are doing it. They call them in US and now in Canada, they call them drive-by lawyer. Corman and Company does it right now. So the lawyer actually go to the client's home, Corman company basically delivered the to them. I've seen some of their lawyers behind the window. They have tapped every paper where they have to sign. They sign, grab the paper, and go. Hopefully, through this pandemic, many industries they will adopt to e-signature. My daughter is a lawyer. The Law Society, the court has started now allowing a mediation process through Zoom. Previously, they wouldn't allow the mediation through Zoom. So the judges, they said, oh, through the Zoom, you don't have to sit around the table here. Send us they are allowing the documents to be, instead of 100 pages goes register and submitted at the courthouse, submitted through the PDF email. So all those things will happen. Corey, question. Corey, what's your, you talking about the data feed?
Can unmute Corey.
Sorry, my sound is cutting in and out. I just think it's interesting, and I've heard from a lot of agents that now more than ever, real agents helping you sell your property has become more important. And it would be interesting to know how the Zolos and the supposedly online no people involved trades have been doing, because I suspect that they've been doing horribly.
So it's very interesting argument. 2 years ago, there was all over the media news, technology will replace the agent. One thing that is proved this pandemic, so remember that the human element interaction doesn't have to be physical. As long as you are the speaker, you are the hero, you are conveying the message, has become so important, not only in real estate. Look at the entire economy is basically halted because that interaction didn't exist. So what's going to happen to you? You used to spend 10, 15% in technology, which was the email, whatever, signature, PDF. Now you go to 35%. But the consumers, they really want to see your face. They want to see your presentation. They want to see they hear your advice. They don't want to email. They want analytical analysis on your behalf. And they can't wait to physically interact with you. And I agree with Corey. Yes, it's those companies are in deep trouble. Imagine us that we've been on the market in Barrie and Simcoe County, thanks to Corey and Mark for years. Number one, how engaged we are, and our average, let's say 15 transaction now for the first 4 months, 6, which is not even a full year. Imagine the Zolo guy or these platform guy that the agents the whole year was making $30,000, $40,000. What do you think they are making right now? They're not making even $100 because they never were involved in the human relationship business. The lead was passed to them. They made a phone call, they drive the person to show the house, this and that, and now they are paralyzed. And now consumers, they just don't go online, search a house or search a property, say, okay, how much? No, now they were going to pay off the phone or a Zoom call. They want to hear you. What do you think about this property? Why should I buy this property?
I love what
Purple Brick is finished in US. They brought a Comfrey, so they will last a bit longer. Yes, I agree, David. 100% I agree.
Any more questions, anybody? I'm just trying to gauge here. We're about an hour and a quarter into this, and we'll have a recording and slides to go out. Steve, any final thoughts or comments?
Re-engage, follow the instruction that we are giving you. Don't be afraid. Get it out of your head. Get it out of your head. It's important not to be afraid. If you're following the protocol with the mask, with the glove, with the sanitizer, I'm becoming a freak in terms of this. I take twice a day shower, change my clothes twice a day, come every morning to this office, clean my desk. So be it. So knock on the wood, nothing has happened. And just go through that procedure. Yeah, become obsessed. We do it. David commented, I became Howie Mandel. He's right, absolutely. I became a Howie Mandel. Tanya Botello here, our great executive assistant, she doesn't even open the door with her hand. She uses her arms. I respect that. So get it out of your head. You just got to go back out there. We cannot stay home and be worried what's going to happen. No. So you got to go out there. You have to go out there. But go out there with caution.
There you go. Well, I think it goes around without saying that we could probably give Steve a round of applause and thank you for the time and the preparation and the numbers, and always around with questions, right? You can forward them, or you got Steve's email, whatever. If you got more in your brain, just let us know. Always here to help. And again, Steve, thanks very much. It's awesome. And guys, have a great rest of your day, okay? We'll be in touch with the slides and the video. Thanks again, Steve. Awesome.
Bye-bye.
See you again. Have a great day.